I visited 17 Asian cities in the course of the second quarter of 2012, and it's noticeable that some trends are consistent between markets and others are very different. One consistent trend is that whether in Tokyo, Delhi, Shanghai, Singapore or Sydney, the crisis in Euroland is casting a shadow over corporate confidence, and this is causing companies to be hesitant when making decisions on their real estate occupancy. For the first half of this year, office leasing volumes in the region are down about 30% compared to the same time last year. Decisions to move or expand are being delayed, usually by a nervous head office somewhere in the Western world. Despite this relative slowdown, our leasing teams at Jones Lang LaSalle in Asia Pacific closed more transactions in Q2 2012 than we did in Q2 2011, and helped landlords and tenants to transact over 13.5 million square feet. Interestingly, the tenants came from all over the world. One example is the Barangaroo development in Sydney, Australia, which is a great development to be working on. It combines CBD access with beautiful parklands and water. We've helped secure pre-commitments from major corporate occupiers for over 120,000 square metres, which represents over 70% of the commercial floor space in the first two towers to be constructed. The international nature of leasing was reflected in a recent mandate in India, where we leased space to a leading Chinese multinational telecoms company. The project achieved a smooth completion due to the relationships with us in both of these countries. Another common thread across Asia Pacific is that all businesses are looking to use their office space as efficiently as possible to keep costs under control and yet to provide an attractive working environment to employees. To help in this, we have launched a new service called Strategic Workplace Solutions, which looks to advise companies on how best to use their existing or new space. This complements our other occupier services like integrated facilities management and lease administration. In the quarter, these teams have been extremely busy, advising a very diverse range of companies including Future Group, Infosys, ExxonMobil, Morgan Stanley, P&G, Tata Power, CICC, Shell and many others. Even though the office sector is a bit quieter, the retail leasing market is still quite buoyant in most parts of the region. It is particularly strong in Greater China, driven largely by the growth of foreign retailers. Fashion and luxury retailers are aggressively expanding their operations. Our Hong Kong team successfully housed the Hong Kong flagship store for Longchamp on Canton Road. Longchamp leased 8,000 square feet over 3 floors at the Silver Cord. One of the positive impacts of the international economic uncertainty is that commercial real estate is in demand from investors looking for an alternative to equity and bond markets. Money from all over the world, plus a significant amount from Asia, is looking to invest in property to provide both income and medium-term capital growth. In recent months, we've advised on most of the large transactions in Asia Pacific, involving the largest hotel sale in Hong Kong at $305 million, the largest logistics deals at $1.6 billion in Japan, the largest retail sale in Guangzhou at $310 million, a major retail portfolio sale in Australia at $629 million, the largest hotel sale in Australia at $415 million, plus 5 of the largest office sales in Singapore. In recognition of our proven track record in accessing capital from all over the world into the Asia-Pacific real estate market, we won the Best Property Consultancy at the REIW Asia Awards in Singapore in June. So there are some trends in the office retail investment markets which are consistent across Asia-Pacific. There are other trends which are different within the Asia-Pacific region. China is seeking to stimulate domestic demand to replace global demand for its exports. India is in a self-inflicted slump due to political paralysis. Australia's fundamentals remain strong, but local politics are also diluting confidence. Japan is faring well relative to the traumas of 2011. Singapore and Hong Kong continue to deal quite effectively with the slowdown in overall trade. I am confident that we will remain very busy in the second half of the year as our clients seek advice to help them make great real estate decisions in these uncertain times. As usual, our blend of detailed local market knowledge and access to global markets and international best practice will help our clients to succeed.